Hey everybody, it's Kimo Sabi here, giving you the update that you've been wanting and needing so desperately. So, Crazy Eights, how's it treating you? Driving you crazy? As Bitcoin price likely does. It's just driving people crazy here. But just to reiterate the last video that I've updated with the Crazy Eights, I was just expecting a repeat of these patterns here. And so far we've got 1, 2, still need a third one up here, probably at the 128 area, and we're just going to go 1 2 3 4 5 6 7 1 2 3 4 5 6 7, something like that, just repeating this leg up in some kind of markup phase. Invalidation for that is probably a daily candle close below, I'd say probably a previous all-time high at 112,000. If you get a daily candle close below there, then I'd say it's doesn't look right, and we're probably going lower, and it might accelerate quite rapidly. But if you do look at how the patterns are playing out, you have that leg up, this consolidation matches that one pretty well, and then an impulse up, impulse up. And if you look at this consolidation, how long it took, it was roughly, I think, 10 or 11 days, and we're currently on like day 11 here, something like that. So we may be ready to pop imminently. It could be ready to go. I'd like to see some higher highs and higher lows coming out of here and just start going early on in the week. But something we often see after the weekly candle close is a sharp drop and then moving up during the week. And we've kind of been seeing that with the daily open as well. The daily open happens and then price pushes down and then comes back up and closes at the highs of the day. So it looks like reaccumulation overall. Not super bearish here, especially when we're closing higher highs and higher lows on the daily. But just for fun, let's just take a measurement here in log scale with a trend-based Fib extension from the low to the 112 high to the sub 100K low at what was that, 98,500, and we'll see where the 1-to-1 is. The 100 Fib extension is up there at 147. We'll mark that off here. That's ultimately the idea of the target for the ABC up, basically. So that's kind of what I'm targeting. And if we have the current consolidation, let's see what that target would be if we take the low to the high from our current low. It kind of has the same target here, 144 to 153 is the pocket I'd be looking for. So 147 is right in the game there, assuming that current low holds, which I'm not totally convinced yet, but on a daily closing basis, I think the low is in. I don't think you close any dailies below that. Definitely not below 114. If you close dailies below that, you're putting yourself at risk of a downtrend there. So currently you're still in an uptrend. As price is pushing up, you've got a half cycle low I do believe was just in. Maybe in here we may have one more stab down early in the week, and we'll look at that pattern. Right now we'll zoom into it a little closer and draw out what I'm seeing here. All right, so if this is the bottom and the low is in and price is ready to rip now, what I would expect to see is a repeat of this leg coming up. And this would get you probably up to 120, maybe 121 and a half, 122, and hold above there. You would repeat this little consolidation here and then break up, repeating that leg. And I think the real opportunity to do that here is over the weekend. If price does want to do that, if you close a weekly candle up here and you have a CME gap down here, any CME traders that were selling that short on Friday will then be trapped, and that trapped liquidity has targets to the upside, because any CME traders that are trapped and they don't have any way of exiting in profit, they will have to close at a loss, and that will continue fueling a short squeeze, buying up price during the week. So that's the ultra bullish pattern that I would say would be happening, assuming price closes, somewhere like 121.5 to 122 in that vicinity, and then does not fall below, say, 119,000. Should be a very high and tight consolidation and not give much in terms of retracement, and just push up all through the week. All right, alternatively, it's possible that this pattern is not complete and we just have this being some kind of ABC down, in which case you'd be repeating this leg, this ABC here. So the price comes back down here to retest the lows. I would say you're going for an ABC up, and it would just look like that leg over there, like that, and like that. That's what I would expect. So if those legs are matching very similarly, then you get this drop here that then comes down to 113.5, maybe down to 112 vicinity to complete this pattern. And then you'd essentially be channeling here, and you'd have yourself a bull flag, and then repeat that leg right there, and then consolidate. From there, you'd just pop right back up to the 118 and consolidate before repeating that, and up you go. Target for that pattern is 128,000, which is just another 8 in the sequence. So we'll see if that keeps playing. So the way that this pattern goes up kind of defines how I'm viewing it. If we do have a retrace back to previous supports from here, I'm expecting an ABC to kind of take some of this liquidity before dropping again. However, if price does not retrace, gives you no pullbacks, then you're repeating this leg and you're up there, and then you're short squeezing. So I'll be entering and exiting the market and kind of posting in real time on Slice if you guys are on there, following along on there, or sign up there. It's a great platform. I love using it, and I'm able to update things in real time. Let's change this over to linear scale, and we'll do some Elliott wave analyses on here just to round things out. Not that I definitely trade Elliott wave, but I just see these patterns because I've done Elliott wave so long. But you have your 5-wave structure right there. And from that 5-wave structure, let's take a Fibonacci retrace from the bottom of that potential start of the impulse to our current all-time high. And we'll see our retrace zones. You see how price hovered around the 382, found support there, and then ultimately found the 0.5 Fibonacci retrace of that wave, potentially being a wave 3. And if that is the case, then wave 4 can very much be complete, and you have yourself a 1, 2, 3, there's 4, and you're going up for 5. Now, where is 5 going to land? I would anticipate this being an extended 5th wave to get it pretty high. If that is to play, probably around the 137. In fact, we can get an exact measurement of that. If that does end up being an extended 5th wave, I would target waves 1 and 3 together, projected from 4 to the 1-to-1. There you go, 134 would be the actual target. So then out of there, you still have this wave 1, 2, and all of that ends up being 3. Then you have a wave 4 retrace back down to, say, 126. You'll chop around that 128 area before ultimately pushing up for your 5th wave. Which in linear scale, that kind of would be the wave pattern I'd be looking for, is 1, 2, 3, 4, 5 up to that 147 area target. And then we'll see what happens from there. What I would expect is some kind of retrace back down to previous support, or price just comes all the way back down and collapses down under 100,000 again. But just play the trend one day at a time. Just play it as we see it. But right now you are closing higher highs and higher lows on the daily, so there's no reason to expect a total collapse just yet. You haven't even started a downtrend on the daily. Weekly trend is still up. 4-hour trend is down. However, it will turn up as soon as you close a candle above 119,200. and chop around there, come back down, probably to previous supports. Mark all those supports off. Those are likely to be buying opportunities in the future. Just for the heck of it, let's draw a trend line from the time high to the low. Yeah, we're coming up on the supply line there. So break above that supply line, little back test, and stop loss at the low, I guess. I'm not sure if price is going to come back down again just yet. Like I said, I need to see price get up there, back up to 120 before I see a small little buy set up very locally and another breakout. But hey, break that supply line, then I would entertain that. I'd say that becomes more likely if you break that supply line and hover above here. I'd say the bottom is more likely in than not, especially with the daily candles, closing higher highs and higher lows here. That might get you the 4-hour higher high, and then you're in alignment to just really start moving here. So, little quick update video. There's not much to update because it's just trending up. Look for your buy setups, and your buy setups may come as low as 112,000 previous resistance. We may back test that again before going up, but from Elliott wave perspective, this is a 50% retrace of that impulse up. It looks good to go. So I'd be ready for an extended fifth wave of wave 3 here, which would just be 1-to-1 here, just ABC up. And that's the way I think markets move. So look for an up move this week. Early on in the week, might have a sharp down move. If we reject that supply line, then look for the buy setup down at 113 for one final low, and then a very nice reaction off of that. If I'm able to update it when I see it, I'll definitely try to put out another video. But until then, I guess I'm going to love you and leave you and tell you to keep your stops tight so you can have a good night. And look forward to making more videos this coming week here.